Is Bitcoin back in the game? 24 hours of volatility hint the whales are awakening. In the world of digital finance, a single click from a crypto whale can send shockwaves through millions of retail investors. And in the last 24 hours, Bitcoin, the world's largest cryptocurrency, has sent a powerful signal. The game isn't over. While the market remains uncertain after June's pullback, Bitcoin has suddenly bounced back, reigniting cautious optimism during an otherwise gloomy summer. But is this a bull trap, or the beginning of a new rally? 1. Price action. Bitcoin gains traction in key accumulation zone. As of the morning of July 9, Vietnam time, Bitcoin is trading between $108,500 and $109,100, up roughly 0.9% from the same time 24 hours ago. Intraday, BTC fluctuated between $107,647, daily low, and $109,122, daily high. This relatively narrow trading range signals an ongoing consolidation phase, possibly the calm before a storm. What's notable is the 24-hour trading volume, which exceeded $20 billion, slightly above the 7-day average. This suggests capital is starting to flow back into the market, an important indicator for traders anticipating a breakout. 2. Whales and institutions. Who's accumulating? On-chain data from CryptoQuant shows large wallets, holding over 10,000 BTC, are actively accumulating again. Over 15,000 BTC was withdrawn from exchanges, mainly from Coinbase and Binance, in the past 24 hours. This indicates that institutions are transferring assets to cold wallets, a classic signal of long-term holding intentions. Even more interesting, Grayscale Bitcoin Trust, GBTC, after months of outflows, just recorded a small net inflow. Simultaneously, Bloomberg ETF data shows U.S. spot Bitcoin ETFs have seen positive net inflows for the first time in 6 days. 3. Market sentiment. From fear to cautious hope. The Crypto Fear and Greed Index has risen from 39 to 45 in the last 24 hours, transitioning from fear to neutral. This reflects a subtle improvement in investor sentiment, though caution still lingers after early July's steep drop. On social platforms like X, formerly Twitter, hashtags such as hashtag Bitcoin Breakout, hashtag BullishBTC, and hashtag BTCTO110K are gaining traction again. However, social buzz remains well below levels seen during the March 2024 rally when BTC hit an all-time high of $73,800. 4. Key drivers. Why Bitcoin is recovering. A. Rate cut expectations in the U.S. Recent U.S. economic data shows weakening job numbers and manufacturing output, increasing the likelihood of a Federal Reserve rate cut in September, a bullish catalyst for risk-on assets like Bitcoin. B. A weaker U.S. dollar. The U.S. dollar index, DXY, has fallen below 105, its lowest in 3 weeks. A weaker dollar typically supports safe haven alternatives like gold and Bitcoin. C. Strong on-chain metrics. The long-term holder, LTH, supply remains above 76%, showing that most investors are still holding and not selling. This provides a psychological support level for BTC prices. 5. Technical analysis. Foundation for a rally or false breakout. On the 4H and daily charts, Bitcoin is hovering around its 200-day moving average, MA200, a crucial technical threshold. A decisive breakout above MA200, supported by strong volume, could open the path toward $112,000 and $115,000. Conversely, rejection near the $109,000 to $110,000 resistance zone could send BTC back down to test support at $105,000 or even $102,500, the previous local bottom. RSI is climbing but hasn't crossed 60 yet, suggesting momentum is growing but not robust. Meanwhile, the MACD just flashed a bullish crossover on the 4H chart, indicating potential for short-term gains, but no confirmation of a long-term trend reversal yet. 6. Risks and red flags. What investors should watch. Mt. Gox overhang. The crypto market is still holding its breath as Mt. Gox prepares to release over 140,000 BTC to creditors. Will it trigger a mass sell-off? Regulatory headwinds. The SEC has yet to approve Ethereum ETFs and continues cracking down on DeFi. Any negative headlines could spook markets, including BTC. Retail investors still on the sidelines. Despite the recovery, Bitcoin's network activity, like new wallet addresses, remains subdued. Without a retail influx or major catalyst, sustained momentum may be difficult. 7. Conclusion. Bitcoin stands at a crossroads. Over the past 24 hours, Bitcoin has shown promising resilience, but not yet a confirmed breakout. Institutional buying and ETF inflows are encouraging, but retail sentiment remains lukewarm. Technically, BTC must convincingly clear the $110,000 level with volume to reverse the downtrend that began in late June. The big question: is now the time to buy when others are fearful? Or is this merely a final bounce before another drop? What do you think about Bitcoin's latest moves? Are we on the verge of a new summer rally, or is this just another lower high? Drop your thoughts in the comments, and don't forget to like and support the channel for more deep dive analysis like this.